Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. By the way, happy Valentine's Day. You know the drill, we've been here since 2003, providing advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, such as our mean reversion systems, and of course our KISS systems. By the way, I just made a video recording with a colleague of mine. I'm going to be putting that out over the next couple of days. You should check that out. But let's go ahead and get started with today's Valentine newsletter, technical analysis on the market. So this is our back-end recorder. I'm going to go ahead and start this recording now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, February 14th, Valentine's Day newsletter. Tonight's newsletter, as you can see, divided into 7 major sections. And as you know, it's been a wild couple days on the market. Today the market rebounded nicely with the S&P gaining 47 points or about 1%. Qs gained 1.2%. The small caps IWM gained 2.3%. However, the indexes are still down for the week, down 0.5%, and for the S&P down 0.85% for the Nasdaq 100. On Tuesday, we saw what I call a shot across the bow in the markets, where the S&P 500 fell 95 points from Monday's closing prices at one point. All right, it did recover about 30 points into the close, but it was a pretty good down day. Again, no one should be shocked about that. Remember, the market's very frothy. Everyone knows that. And I've also been telling you that any day we could get a 80 to 100 point down day in the market. So on the weekend and on Monday, I put out some hedges, inverse ETFs, SQQQ, and SPXU. Hopefully some of you took that and you had a nice trade. Hope you took your profits. Obviously, one reason for the big sell-off on Friday was that CPI inflation data came in hot, okay? And the market didn't like that, and that's why Tuesday was such a good down day. And also, the thing, guys, the market, remember, we've been pointing out the market's had 5 clear waves to the upside. Whenever you have 5 waves to the upside, you want to start getting cautious because, you know, that starts to end a trending move and you get a pullback. Otherwise, Tuesday's move caused a slight break on the symmetry on the S&P. That means there's higher odds for a lower high now. Now, we didn't get a symmetry break on the Qs. The largest pullback since late October was 112 points on the S&P, and Tuesday's pullback at the lows was 129 points. So it was a slight symmetry break. Another thing, Tuesday was a rare 90% down day in the market. It's rare to get those only a few sessions from record highs. And I'll be talking about that in a slide in a moment. Again, nothing's changed from our technical perspective. We've been looking for this initial move to end any time. It could have ended already, or we could maybe still get another move. Either way, I'm looking for this to complete wave 5 of major 3. Then I'm looking for a deeper wave 4 correction. And once that's over, then I'm looking for a new market to go up to a new high again. But that wave 4 could last weeks, guys. Okay. Again, there's simply too much passive investing in this market. People happy-go-lucky, not setting stops, you know, throwing carefree, etc. And again, you always need to have a plan in place, some sort of strategy. Also, we had a big rally on Tuesday on the 10-year Treasury yield. All right, guys. So let's go ahead and get started here with the slides. So first off, item number 2 shows the index sector table, what transpired today and this week. So you can see nice rebound today from Tuesday's rug pull. The Russell is clearly leading. It is possibly in a coil pattern. Could maybe make another high perhaps, which I'll go over in a minute. The indexes are still down for the week. As far as the major market sectors, the 21 sectors we follow, only 2 were down. So it was a pretty broad-based rally back today. And again, the ones that were down very small. Currencies, US dollar had a big day on Tuesday, but pulled back today. Crypto continues to be strong. Bitcoin up again. The crypto stocks continue to roar. And the commodities, this was the bloody red area. Almost all the commodities were down here. And boy, natural gas, guys, it's down 12.9% for the week. it's approaching a support going back to 28 years. And I'll show that in the bigger picture charts. But all these commodities are down except for sugar, which I highly doubt any of you are trading. I'm certainly not. The precious metals, mostly up here. Silver, GDX, the miners up slightly, but again, down over 3.5% for the week. And the 10-year, which had a big rally yesterday on Tuesday, pulled back today 1.4%, but still up almost 2% for the week. Next, image number 3. So here's that image, and this is from Mark Ungewitter, however you say his name. Apologize if I got that wrong, but I thought this was an interesting chart. So on Tuesday, we had what do you call a 90% down volume day. But what made it interesting was it occurred within 3 sessions of a record high. So he shows the data points here. There's not a lot of data points, so it's a rare event. And if you look at most of these, again, there's not a lot of data points. Most of these occur near a major high, but a bit early. You know, one occurred in 1999. That was obviously early, but it was a little warning sign. And then you had one in 2007, mid-2007, and of course the top wasn't until late 2007. And then you had one in 2015, then market rallied for a few more months. Then you had your bigger pullback. The COVID one, that occurred right near that crash high, COVID crash. But again, that was kind of the COVID was definitely a special event. So we got one here. And this also tends to correspond with some of my bigger picture analysis. I am looking for a pullback here very soon in the market, either now or within a week or two. But I don't think it ends the bull market yet. I think we still have another rally after that. So kind of supports what I'm seeing. But thought these were interesting stats. Again, little shot across the bow on Tuesday. Next, image number 4. Here's the news calendar. Again, the CPI, core PPI set that sell-off on Tuesday. On Thursday, we have initial jobless claims and natural gas inventories. Still have some earnings as well. We're getting through earnings season, and I think getting through that'll be another catalyst that won't be holding the market up. Seasonality wise, you usually start getting some weakness after about February 15th. All right, before we get into the index analysis, again, and just like a broken record, these KISS systems, I just want to keep going over this. So because about half of our subscribers are using these, and I want to make sure other ones who haven't used them are using them. Make sure to set some favorites. Go to the tables, click the star, set your favorites, and click the check receive alerts from the favorites box. Again, if you're not a subscriber, this is one good reason to be a subscriber, because you can come here and get automatic alerts on these systems. We now track over 700 stocks on the KISS system. You can do a search, so it's pretty incredible database. Image number 6, here's an example of an email you would get if you're a subscriber and you set favorites. So whenever your favorites have a change, the KISS system takes along, or it sets a new moves its smart trailing stop higher, you get a nice email, nice clean table. So let's say you're trading these systems, and you get a CrowdStrike sets a new smart trailing stop and you're long, you go ahead and go into your brokerage account, adjust your stop, reset it, make it good to cancel. That's how this works. Pretty cool stuff. Some examples of live KISS system trades. Here's UPRO, which went long back in early November. The trade is up 45% currently. Smart trailing stop is 58.80. It's moved its smart trailing stop. It's been able to move it up 16 times. Just methodically moving it up over time, which is cool. System went long on November 3rd. Quite a few subscribers took this who were up, again, substantially, and their profits are protected from that smart trailing stop. Here's NVIDIA. It's all the NVIDIA craze. We'll see how far NVIDIA goes. The system went long there into December. Set the initial smart trailing stop at 458.90. Has moved it up 10 times. So the current one is 655. Some folks are now wondering if NVIDIA is going to go to 1,000. Is it going to go to 1,000 before it pulls back, or is it going to pull back first? I don't know. But let's just say it keeps going and it goes to 1,000. Well, the KISS system will keep you right in all along that ride. Just will methodically raise its stops along the way, allowing you to ride the trend, giving you that protection. And finally, chart number 9, here's SMCI. Now, this is kind of a crazy one. I didn't take this trade. I wasn't even aware when it entered. It wasn't one of my favorites, but it went long back in, the entry was November 20th. As you can see here, it's raised its stop 17 times, and it trades up almost 200%. That's unbelievable. Again, you're not going to see things like that a lot. It's going to be rare, but it can happen. And this isn't back tested. The system's been live on the website since spring of last year using the same settings. So these have all been real. You can think about the KISS systems kind of like, I know this is corny, kind of like a, life insurance for your portfolio. Kind of the corny analysis or analogy I like to use is, hey, let's say you're 30 years old and you're married, you have a family, you're healthy, obviously, you work out at the gym, but do you not have life insurance because you're probably not going to need it? No, you still have life insurance. It's the proper thing to do. It's kind of the same thing for these KISS systems. The market is in feel-good mode. It just keeps going up. So does that mean you throw caution into the wind and not have any, exit plan or strategy? No. KISS systems are good because they can keep you in that trend and, give you a stop out in case when things finally end, when the music stops. All right, enough of that. Let's move back to the general market analysis. So here's the daily chart of the 5 key major indexes: Dow, S&P, NASDAQ, Russell. One thing on everything except for the Russell, again, we've been trending up here. Little bounce back today. Again, still far from Monday's highs. We have some open gaps here, which could be magnets. We haven't filled those yet. Notice the Bollinger Bands are starting to pinch in here again a little bit. They're just starting to pinch in. The last time they pinched in January, then we had another move up. But I'm kind of wondering if this time is setting up to an ending move. Moving on, here's the Dow Jones. And, okay, again, big sell-off yesterday. Still holding the 20-day moving average, but you now have a really good MACD divergence here, confirming as the MACD is crossed down, RSI divergence. So I think this is a matter of time. Again, even if this makes another high, there's not a lot of blood in the turnip here, guys. So, new longs here are very risky, and just be aware we have some pretty serious divergence setting up. Chart number 13, here's the S&P 500 weekly chart. Remember, I've kept this upper trend line in here in place. Notice price for the last 2 weeks now has struggled at this upper resistance trend line, pulling back from there this week. Clearly resistance. Chart number 14, here's that daily view of the S&P I've been showing, this tight rising wedge. Again, we had that sell-off yesterday. We still held the wedge trend line. We're still above the 20-day moving average. Bouncing back today. We broke symmetry, though. Remember, the largest pullback was 112 points there in late December into January. So Tuesday's pullback, I can't remember the math now, but it was about 130 points. So it was slightly larger than that. And symmetry is measured on an intraday basis, not just a closing basis. So that does give us some higher odds at a lower high here to form. Again, we have a pretty clear MACD divergence here now. Obviously, the RSI divergence as well. We'll see. We could still form a lower high, come down. We could also still go up in the wedge, but clearly it's getting tired. By the way, this 4,600 area is my target on the next good correction. That's previous major resistance. It's now major support. Chart number 15, here's the zoomed in daily view, just showing that same channel, just on a zoomed in time frame. Again, we didn't fill that gap. We had that spinning top doji on Monday, and that was a warning, remember? Whenever you have these spinning top dojis. Next, chart number 16, here's the KISS Trend System. Again, no changes on Tuesday. Price bounced right off the ATR, which is support. Current smart trailing stop, it hasn't moved it up yet. Still there at 48.18. Chart number 17, here's the 4 time frames. Remember, I talked about these A's showing up. What are the A's? That's amateur hour, we call it. Amateur. So whenever you get in an uptrend like this, it's generally smaller traders chasing a late rally. They're late, they're finally capitulating and buying in. Used to be usually smaller trade size. It's also declining volume on an uptrend. So again, they're not perfect. They can be early. You can see you had some back there in just late December, then you had a pullback. And you've had some Friday and one on Monday. And of course, we got a little pullback so far. You had it on a half-day chart. You had a DeMark 13 on a 130-minute, and you had a DeMark 9 on a 78-minute. All those produced pullbacks. Now we bounced off these support cycles for now. ATR, by the way, in these smaller time frames is now resistance, such as the half-day and the 130-minute. Next, chart number 18. Here's the half-day chart we've been showing. Remember, the thing reason we've been cautious since last week is that last move to that new high around 5,550. We could have counted 5 waves up, and whenever you have 5 waves up or down, you start to look for some reversal potential. Anyway, this kind of channel, this broken channel line could be a little resistance perhaps. Another thing to monitor would be this trend line on this RSI. Breaking that could be a valid short trigger as well. Chart number 19, here's a 60-minute chart. How I had the channel drawn, we broke below it, came back above it for now. Otherwise, the dotted line here, that's symmetry. So similar pullback there. Next, chart number 30, here's a 30-minute chart. Let's move on. And chart number 21, here's a 15-minute chart. So notice this open gap. That could be a magnet still. Notice so far price has retraced 61.8% of the sell-off from that Monday's highs. That 61 fib could be an area where it forms the lower high. All right, so it is something to watch tomorrow. See if we pull back right from here, or if we go up higher to fill that gap. Chart number 22, here's a 5-minute view showing the intraday. So we had a gap up today after yesterday's late day bounce. Then we pulled back. Perfect ABC. By the way, guys, pro tip, in an uptrend, you want to look to buy 3-wave pullbacks like this. By the way, that's what the KISS system looks for situations like this. It looks for 3-wave ABC type pullbacks. Then we rallied into the close. Next, chart number 23, here's the triple Q's weekly chart. Remember this wave count I've had in place since early fall of last year. This is my primary count that I've been favoring, that we're working on this wave 5 of major 3. It could have ended here, or it could still go on. But once it's complete, I'm looking for a deeper wave 4 correction that could last for weeks. Okay. Once that's over, then I'm looking for a new rally to a new high. But this wave 4 could be a bigger degree. It's a bigger degree wave 4 than the one we had in the fall. So you got to be cognizant of that, guys. Chart number 24, here's triple Q's daily. Again, still holding this channel. This Q's did not break symmetry. It needed to pull back below 421.50. Doesn't mean it won't this next time, but it didn't break symmetry unlike the S&P. Again, we had pretty good divergence here in the RSI, on the MACD, on the Monday's highs. Chart number 25, here's the half-day chart, just showing this clean channel to monitor. Breaking this channel line could be a trigger for a short. Chart number 26, there's a 15-minute view, just like on the S&P. I added fibs. 61.8 fib, didn't quite make it there, but it's pretty close, and you can see the open gaps a little bit above that. Next, chart number 27, here's the triple Q's KISS system. Again, no changes. Smart trailing stop still 412.29. System went long on October 31st. It's done an amazing job catching this trend. Even if the market sells off from here and it hits that stop, it's still a very profitable trade. And chart number 28, here's the 4 time frames. Again, similar look to the S&P. For now, we bounced off the ATR on the daily. We have ATR resistance on the smaller time frames. Next, remember on the weekend and on Monday, I put out these inverse ETFs as at least hedges. So these did give you a trade, SQQQ. Now it's pulling back today, but if you bought this on, Monday or something, you did have a nice little pop yesterday. And the other one, chart number 30, here's SPXU. That's the triple inverse ETF for the S&P. Again, this is one that you could have bought on Monday, and it popped up nicely. Pulling back here pretty good, but it gave you a trade. Next, chart number 31, here's small caps, IWM, nice rally back. Now it's forming this more logical coil. You got a couple touches up here. Remember, we didn't have that last time. So this could be the pattern that's forming, perhaps. We'll see if it makes another high. I would view that as some sort of wave 5. But we'll see how it oscillates in this coil for now. And finally, chart number 32, here's the 60-minute chart. You can see the same coil. Support, resistance. We're kind of basically in the middle now of this pattern. So there you go on the indexes, guys. Let's look at a couple indicators. So here's the VIX. So the VIX closed outside its Bollinger Bands on Tuesday. It closed back inside today. Now, technically, that's a VIX Bollinger Band buy signal. The last three worked really good. I think this one's a bit higher risk, though. Unless the market just screams from here, which I don't see. I think the market could make a marginal another high if it wants to, but you know, just be cautious of this one a little bit, but it did trigger. Chart number 34, here's the NYSI 9 EMA crossover system. Again, we have these divergences forming on some of these breadth indicators still. Remember, those aren't sell signals on their own, but you have the divergence building. Looking at a few of the sectors, chart number 35, here's transports, IYT. Boy, this cup and handle is playing out beautifully. I marked this out a couple weeks ago, and look at this puppy. So this has been pretty awesome. That pullback on Tuesday held the neckline there, that pattern, and then boom, up today. Nice trade if you took this as a long couple weeks ago on that 265 break. Chart number 36, here's XLK Technology. Again, we had a divergent high on Tuesday with the RSI and the MACD. For now, still holding that 20-day moving average. Hasn't taken out the highs, so still a little cautious unless it can take out this gap and keep going. Chart number 37, retail. I've been showing this. Remember, this has been fairly strong after that consolidation. Chart number 38, consumer staples. Remember, this has been weakening, and you can see it continues to weaken. Look at that volume, pickup in volume there. Chart number 39, biotech, still holding in here pretty good. It's kind of, I think it's, whatever this does, it's going to depend on what IWM does, because a lot of components in biotech and small caps. The energy sector, weak today again. Again, it's still struggling to get through this downtrend line. It needs to clear that. If it doesn't, if it takes out this last higher low in early February, it could flush down within this pattern if it wanted to. And chart number 41, oil services, same deal. It really needs to break out of the channel. Hasn't done so. And a chart I showed on Monday, just something to keep an eye on longer term. XOP, that's S&P 500 gas exploration. You got a nearly 2-year coil setting up here, and kind of a big inverse head and shoulder look to it, going back to 2016. Looks pretty good, something to watch longer term. Remember, each candlestick is 1 month, so this could chop around in here for much of the year before breaking. But it's one to write down, to check in once in a while on. Moving, chart number 33, here's the bullish percent energy index. This did cross up for a trade signal here over this moving average. But so far, kind of a muted move in the price, though. Chart number 44, following up on the Chinese market, still hanging in here for now. We'll see if this has a decent low or not. You know, this area has been absolutely pummeled. Moving on to the bond market, high yield corporate. Remember, this failed to make a new high, so it has a divergence versus the S&P. Little rebound today, but it's severely lagging to the S&P. And so if we look at chart number 46, here's the S&P versus high yield corporate. So you've had this big divergence forming for a month and a half. Remember, S&P generally follows high yield corporate. It's these times when you get the divergences that can be important, just like you had in October lows and you had in the July lows. So this has been lagging for a bit, and that's a warning. Chart number 47, here's TLT. Took out that last low, kind of more of in a channel at the moment. And chart number 48, here's the 10-year Treasury yield. Remember, I've had this wave count in here where I was guessing this was an ABC of A, that was a higher low wave B pullback, and I've been looking for a rally up in C. And with yesterday's move, this is playing out. Moving on to commodities, here's DBC. Again, this isn't a bullish pattern overall. It bounced up in a little bit last week, but ugly day to day. This is, if it loses this support, it could take another plunge. Again, it's going to be highly dependent on crude oil. So chart number 50, here's crude oil, still in the same old pattern, rallied off support, but stalling near resistance. Chart number 51, natural gas. Boy, this area has been absolutely smashed. Down again today, down 4% today. Every day it's down 3 to 4%. They call it the Widowmaker. Be careful, guys. This is getting very oversold, but be careful of trying to catch falling knives without a trigger. Chart number 52, here's a 15-minute chart to monitor. You can see it's kind of a parabolic move, but I still don't see a trigger yet. You need a trigger to attempt a long here, guys. And if we look at the bigger picture chart, here's the monthly chart going back 28 years to 1995. Notice price is coming all the way back to this 28-year demand zone. So maybe it'll find support there. That's why I am monitoring it here. But again, you need a trigger. Don't just step in front of a moving train or maybe a falling rock or falling knife or whatever. Chart number 54, copper, down again today. Remember, we've been showing this head and shoulder pattern. Chart number 55, DBA, pulling back from that overbought condition. Had a heck of a move, though, from that pattern. And the weekly chart number 56, here's the big cup and handle. So pulling back this week. The broken cup and handle trend line is now big support. Chart number 57, here is Bitcoin, which just continues to power higher. So, money continues to rotate here. Most gold bugs, I think, converted to crypto nuts. 52,000 now there. Big moves in these crypto stocks that we've had. Here's Ethereum Grayscale ETF. We put this as a long last week through that trend line. Hell of a trade now if you took that. Chart number 59, MSTR. This was a much bigger percentage move. You get a nice clean trigger here over 527, 520, 530 if you want to round it. Things up in the upper 700s now. Look at the volume move. One hell of a percentage move. Chart number 60, Mara. Again, look at that move from this little wedge pattern. Hell of a percentage move. And how did the KISS system do? KISS system nailed it. Here's the KISS system on Mara. Went long here on January 25th. Trades up 70, almost 71%. Think about how many years of the website you could have paid just with that trade. And look at the last trade. It caught an awesome trade back in December. So you can check what the KISS system is doing on the other crypto stocks, such as GBTC or whatever. And here's Hive, another crypto. Remember, we had it as a long off this demand zone, and look at this move. Awesome. Hope some of you guys have been riding this trend. Moving to US dollar. Here's US dollar pulling back a little bit today, but remember, yesterday, huge rally. Took out that 61 fib. Honestly, there's not much resistance on that big down candle there. So, and speaking of US dollar, here's precious metals, which continue lower. Slightly breaking this little coil. Chart number 65, another gold daily chart. So remember, guys, this has the ratio. Again, the stocks continue to underperform. Remember, on Monday, they outperformed for one day. You got to have more than one day, guys. Okay? It's got to outperform for days in a row. Okay? Multiple days in a row. It's got to break this trend line. Otherwise, the bull's hope here is this is working on a wave C. Chart number 65, here is silver. This is the weekly chart, down about 1% for the week. Chart number 67, GDX, the gold miners, again, smashing through this weekly coil trend line. Not looking pretty, guys. Here's the daily chart. Again, after filling that gap just to puke down, back essentially to near those October lows. And chart 69, here's the bullish percent gold miners index system. And it's actually now in the oversold territory zone. Again, you need a reversal. This has been a very good trigger system. You had a sell signal back in May, buy signal in September, sell signal in December. They've all been excellent signals. So if you want something pretty clean, you could wait for this instead of trying to pick a bottom. Moving on to the stocks, here's NVIDIA. NVIDIA up and away. Remember the KISS system continues to ride this up. Hell of a move. Everything's about AI, it seems. If the market holds up for a little while here still, maybe this puppy goes to 1,000. It's not getting too far away now, is it? Chart 71, here's Microsoft still holding that 20-day moving average. We had it as a long back here off this coil. KISS system caught that as well. Chart 72, ESEA was a short idea from last week, rising wedge, and look at that puppy, played out. Now, this was our target, the 50-day moving average. Make sure to take some ample profits there. Chart 73, ABUS, long idea from last week, a little low price stock. Beautiful move out of this coil. Look at that volume. Take some profits. Chart 74, MHK, another one, broke through nicely. Chart 75, True, TransUnion. Remember I had this as an ascending triangle. Busted out nicely this week. Even on Tuesday when it pulled back, it held that previous breakpoint as support. Big update today. Great trade. Hope you guys caught it. This was absolutely a textbook pattern. Chart 76, OTLY, another nice pattern. Nice move out of that tight coil we've had. Great trade. Chart 77, DOC, and another nice trade out of this coil. If you're still long, I think you can move your stop up right around that higher low at 37. Chart 78, NVEI, had a nice move up, pulled back. You know, it's still holding in here. At this point, I'd probably put a stop right there where you see my dotted purple line. Here's some new ones. Chart 79, TWLO, Twillo. Nice pickup in volume today. See if it can clear that trend line. Chart 80, here's TMHC. Kind of an interesting pattern here. Look at these two candles, but a clear, easy breakpoint, breakout resistance over 56.11. Chart 81, Zillow, possible long. Notice I drew the downtrend line through that big wick. That was quite a candle. I wonder if that must have been on news or earnings, but you know, if it can get back above this trend line, maybe you got a shot at a long. Chart 82, ASPN. This is a pure Momo play over today's highs. It's had a hell of a run here. Massive volume. Again, this is only for advanced traders because this could, you know, trigger up and reverse suddenly, or it may continue up, but it is one to watch for Momo. Chart 83, ELVN. A little pharmaceutical resistance, 1740. All right, guys, that'll do it. Let's see what happens tomorrow. And again, thank you for your support. If you're not a subscriber to Breakpoint Trades, consider subscribing. Pretty awesome sauce here. All right, have a good evening. Take care.